Okay, hello everybody, and welcome to Sidoti's August Microcap Conference. My name is Brendan McCarthy. I'm an analyst here at Sidoti, and I'm pleased to welcome Huize Holding Limited. They are an insurance brokerage company based out of China, and they are traded on NASDAQ under the ticker HUIZ. I'm pleased to welcome co-CFO Ron Tam. He's going to be presenting with us today. And before I hand it over, a quick reminder, the Q&A tab is located right at the bottom of the screen there. Feel free to type in any questions throughout the presentation and we can save time for Q&A at the end. But with that said, Ron, take it away.
Thanks, Brandon. Well, good morning, everyone in the US. It's my pleasure to be here today and to walk you through our equity story. We've actually been around for quite some time. We've been listed on the Nasdaq Stock Exchange since 2020. Actually, we were one of the first Chinese companies to get IPO'd after the COVID outbreak. So that gives you some context as to when we were listed. As a company, we've been around for 19 years. We are actually one of the leading insurtech players in China. We are a Chinese company, but then we are also quite international, with over 30% of revenues now coming from ex-China market. So that includes Hong Kong, that includes Vietnam, and also we are entering Singapore. So we're now an international franchise. We are not just a Chinese company, although our roots are grounded in Shenzhen, and that's where our headquarters are located. So in terms of the management team, I think a very quick snapshot of our exco. Myself, I am responsible for obviously the strategic financial matters of the group. I'm also head of the international business development, having built the Hong Kong business, the Vietnam business, as well as Singapore right now. I joined the company in 2020, and I'm an ex-banker with Goldman in my early days of my career. The rest of the team actually comes from mostly insurance companies background. Our founder, CEO, Andy, he was with Ping An, which is the top insurance company in China, and he founded this company in 2006. And we were actually one of the first frontiers or pioneers in the online insurance brokerage space in China, and we are obviously one of the leading players now. And then Leo is our president. He's previously with Star Insurance and AIG in China. And the rest of the team is also coming from the likes of KPMG, ICBC, which is top Chinese bank, and also Cigna joint venture in China. So mostly coming from leading insurance and financial institutions background with a local and global experience combined. In terms of the company's mission statement, I think we're proud to say we are one of the leading insurance technology platform in Asia because we're now not in just China, we're also in Hong Kong, Vietnam, and now going to Singapore. Our main value proposition is to connect consumers with carriers, which is our insurance company partners, and also intermediaries. And this includes obviously insurance agents, and also any intermediate that has customers that can be monetized in the insurance product. And our ecosystem is fully digital and it's AI driven. We are now proudly to say we are one of the few insurtech players in China and in Asia that actively adopts AI in our solutions. And on the next slide, you can see that in terms of the value propositions to each partners or in the ecosystem. For example, in the insurance carriers vertical, what we provide is digital transformation solutions for insurers. Obviously, they do not have to incur the CapEx in the IT spend. They can just connect to Huize, and our platform can overnight turn the insurers into a digitally connected with consumers on multi-channels, online and offline. So saves a lot of the admin costs on development and also obviously help them connect to the mass retail market very efficiently. On the customer side, obviously, what we want to provide to them is a transparent solution, transparent pricings, many products to choose from. They don't have to only pick one or two providers. They can get access to over 120 providers that are available on our ecosystem, and also provide a very streamlined digital transaction experience. So in terms of the application, underwriting, and the claims processing, it's all done on the mobile app or in the digital channels. So no paper filling, no form filling, and all that. So for the agents, what we empower the agents is obviously they can connect to our platform to sell products to their customers. and the digital tools that they provide for the agents are, top-notch and very convenient to use. They can use that to help customers buy insurance policies. They can use that to manage the CRM, manage the customer base, to extract more value from the customers going forward, and to better serve them as well. And then finally, the intermediary side, we can work with many different intermediaries. Typically, these are offline merchants, conglomerates. These could be, agencies or brokers who does not have the digital setup that we have. So basically, we are a platform provider for these intermediaries, for them to utilize our platform to sell insurance to their customers. And that is also a digital transformation, product for them or solutions for them. So in terms of our scale, business scale, we have been ranked number one in terms of independent online life and health distribution in China. We are a partner of choice with over 130 leading insurance companies, with the bulk of it in China, but nowadays also in Vietnam, as well as Hong Kong. And distribution partners, we have over 10,000 of them. Many of them are what I mentioned, the intermediaries that could be working with us to sell insurance to the customers. We have over 10 million policyholders on our platform since 2006, over 19 years of operation history. We have accumulated 10 million policyholders. And again, predominantly most of them in China, but nowadays also in Hong Kong and Vietnam. Our GWP, which is the gross written premium, which is a metric that is to measure insurance distribution. In the e-commerce world, this will be GMV. So our GWP is 844 million US dollars last year. We obviously ranking as our top five player in China. We have almost 200 million US dollars of revenues, and have been growing consistently in the past few years, especially during the COVID time where China was still under lockdown situation. We can see that business continue to grow, and also digitalization have been very helpful in terms of uh, uh, you know solving the pain points for insurance distribution during that difficult time. And also the adoption of it is also accelerated during that time. I mentioned that internationalization strategy since 2023. We have over, 30% of revenue that we're targeting this year coming from international markets. We have AI integration into our platform. We have a proprietary large language model, which we have been privately trained with our own proprietary data to basically generate a lot of AI solutions for the platform. We have a DeepSeek integration, which I can mention it in a bit later in a later slide, which has improved efficiency and product matching accuracy to a very high level. So just to visualize how we do distribution in our platform. So we have three main models. You can see that we have a direct to consumer channel, which but what that means is that we use our own Huize logo, our own brand name, and we reach out to the consumers directly through mostly social media channels. So you can see on this one, it's the TikTok of China. So we do live streaming. We also do the Red Note, Xiaohongshu, which is a very popular social media app in China, kind of like Pinterest. And then obviously the WeChat ecosystem, we have mini programs. We also have a mobile app that addresses directly to consumers, and consumers can utilize our app to ask for recommendations, to look for the best products, and also obviously to make the purchase seamlessly and digitally. We have a B2B2C, which is the intermediary model. And you can see on this slide, you can see this is a very popular influencer or KOL in China that talks about insurance. There are literally thousands of these people operating in the country. And this model has been extremely scalable for Huize. And we are also replicating this business model in Vietnam right now, and also the rest of Southeast Asia. We think that this is the right model to reach out to the Gen Y and Gen Zs, which are becoming the major force of consumer buying insurance as they reach their 30s, when they start to form families and have kids. So this is the best way to reach out to the mass retail market, the most efficient way to reach out. And basically, we're social media pushing content to educate consumers and to make them aware of insurance requirements. And then lead generation is generated from these channels. And then our platform help monetize these leads for our partnerships. So lastly, the B2A to C is the agent empowerment business. So any agent that is licensed in China and nowadays in Vietnam, they can connect to our platform. and register on our platform, and then immediately they get access to over hundreds of insurance providers' products at the best commission rates. And obviously, the most important thing is they can serve the customers digitally on the mobile app. So our customer base has been, very much consistently growing over the past few years. You can see from 6.5 million to 10.6 million last year. We broke the 11 million mark already this year, and it's still growing consistently. You can see that the average ticket size, which is the wallet share, is improving as well, from 40,000 RMB, which is around 5,000 US dollars to 10,000 US dollars this year, which means that, increasing trust and engagement with the customers that we have. We have a relatively young customer base, 35 years of age on average, 68% from top tier cities of China, which would literally means the top 20 GDP regions of China. We have a very high persistency ratio, 95%, which is very important for our insurance company partners because they measure us on this KPI, which means that our customers are renewing the policies. 95% of the customers renew the policies, and we're talking about 20-year, 30-year policies that we typically sell on the health product side. You can see that the cross-selling and upselling opportunities have been demonstrated. We have repurchase rate of 40%, which is quite high. Again, that speaks to the trust that the customers have on our platform. I think the service quality that they provide to our customers through the platform is also something that is a very big testament to the brand in China. We can see some of these KPIs here, 99% satisfaction rate. Most importantly, we actually help our customers, get claims processed efficiently, provide the expert support for them when it comes to like health claims or, somewhat controversial claims. We always stand by the customer. So 800 million RMB, which is 100 US plus settlement amount in 2024. This is probably the leading number in whole China. 1.3 million families served just alone in this year, last year. For the insurance company carriers, you can see some names here. The key highlight is that we are working with big brands in China and also international players such as Prudential, Manulife in Hong Kong, and AIA, and also in Vietnam, we're working with the top players. Not only do we just distribute products, we also co-develop insurance products with our carriers partners because what we have is customer insights and what we have is data accumulated over 19 years of operations. What we can do for them is we can white label product design for the insurers, and then obviously what we can secure is an exclusive marketing rights to that product. So that has been very instrumental in the success of our business model, and you can see that 86% contribution to total GWP in 2024, fourth quarter from life and health, and of that 53% is co-branded exclusive products that we co-develop with the carriers. And this is a major moat for us in the business. And then AI, I talked about, I'm not going to spend too much time, but what we do is we have deployed AI tools and technology throughout the whole platform business process, from the front end, from the customer acquisition side, lead generation, customer servicing, chatbots for customer service, claims processing, and so forth. So what you can see is that we are looking at improving operating leverage, and we can do probably 10x the business volume without obviously 10x of the human resources. We can probably looking at a pretty much a non-linear kind of relationship. And employee productivity, and you can see from 2019 to 2024 has improved fivefold. And that also speaks to the operating leverage that we have. So I mentioned all these AI points just now. I'm just not gonna repeat. It's basically, also in terms of risk management, underwriting, we have AI solutions that would help, reduce underwriting time to as quick as 1 second. We also reduce fraud rates and risk identification rate has much improved with the deployment of the AI technology. The China market growth is still structurally very attractive. I think over the next 10 years, we're looking at very strong CAGR, double-digit CAGR, irrespective of China's macro headwinds. I think that obviously the lingering trade war situation, but I think the China economy has been resilient. And insurance distribution, I think, is increasingly going to be in the favor of brokerages such as ourselves. You can see on the lower right-hand corner, the makeup of the insurance distribution in China from agents' perspective or brokers is still very small fraction of the overall pie, at 6%, compared to just say Hong Kong, 30%, which is where I am right now. And in the US, it's 52%. So, we can look at China as growing that 6% number towards more like 30% in the next 10 years. So the pie is also, enlarging, and also the share of the pie is also increasing. So I think structurally, the market opportunity is very much intact. And obviously, in the Hong Kong side of things, we are trading a lot of the wealth outflow from China for overseas allocations, and we have been in business in Hong Kong since 2023. Right after the COVID reopening, we have been capturing that momentum, and the Hong Kong business growth is very strong. And then that leads to our Singapore expansion, which we've just been licensed by the MAS of Singapore, which is the regulatory body in Singapore, to set up shop in Singapore as well. Which leads to the next slide, which is the international business. We have entered Southeast Asia. I think Southeast Asia is kind of like a same kind of a playbook that we have in China. So Vietnam is the first market that we explored, and already landed in Vietnam since last year, late last year. We are building a very much of an ecosystem solution as well in Vietnam, akin to what we have in China. Southeast Asia growth opportunity, obviously, we're looking at mostly the top few, which is Vietnam, Indonesia, and Philippines, because these are the most populous countries, 100 million population each plus, and also very young demographic, average age of 29 years old, and which is exactly the sweet spot for us in terms of business model. The insurance density and penetration is still very low in Southeast Asia, but Vietnam, why we chose Vietnam as the first step is it's now breaking the 5,000 US GDP per capita mark. And what that means is that from the OECD countries' experience, insurance penetration is very much going to take a very leapfrog, improving penetration quickly in the next 10 years. So this is the golden age of insurance for Southeast Asia. So our current focus right now is the growth markets. We will do a combination of M&A and joint venture in these markets. So I talked about Vietnam. This is what we've been doing in Vietnam. We've acquired a 75% stake in Global Care, which is a leading insurtech player in the local market. We've empowered the business with all our Chinese technology and product and solutions from China. We have been seeing a very robust growth, in the past few quarters. So this is still a very much early stage expansion, but we see that there's a huge potential in terms of both the country itself attracting a lot of FDI inflows, particularly from the US. Nvidia setting up an AI center in Vietnam due to the talent supply in Vietnam as well. And GDP growth next 10 years likely to be the high single digit CAGR per year. Disposable income, rising middle class. These are all the same story that we've been seeing in China for the last 15 years. So we're very confident that Vietnam is a very attractive market position for us to enter and bring a value to shareholders. So I'm going to stop here. I think in terms of investment highlights, we are leading insurtech platform. We are a true and AI-driven, data-driven insurtech solution provider to the market. We have a sizable customer base, which is still relatively untapped in terms of other cross-selling opportunities, not just in insurance. For example, in wealth management, I think we are just starting to scratch the surface. We have very much a customized product offering. We have, a very attractive market opportunity both in China as well as Southeast Asia. And we are very healthy in terms of our cash position. We have, almost 30 million US of cash, 30 million US dollars of cash, which actually is even larger than our market cap right now. Right now it's around, call it 30 million US dollars of a market cap, which is just cash value on the balance sheet. So we are covered by a few brokers. Citi is our IPO banker, and they're still covering our research. CICC as well is a Chinese investment bank. And then UOB is a Southeast Asian broker based off Singapore. So with that, I'm just gonna stop here, and I would like to take any questions from the floor if there's any.
Great. Thank you, Ron. We appreciate the overview there. We can open the floor for Q&A. As a reminder, if you have a question, feel free to type it in the Q&A tab below. Why don't we start with your position in the market? Just talking about your competitive position. Are you able to quantify what your market share is, I guess, by written premiums or written policies?
Sure. I think we are a top five player in China, right? The top two or top three actually are the big conglomerates, the likes of Tencent, Ant Financial. Those are the big names. But as an independent player, we are probably the number one player, and our market share is around single digit, like call it 4 or 5% in China. And the China market is still very fragmented. So in terms of market share, it's that's where we are right now.
Got it. And turning to distribution, can you talk about the revenue profile of your business, just I guess both on the D2C and B2B partnership side?
Sure. So our total revenue is around, 170 million US dollars last year, right? And our revenue stream is very straightforward. It's just commission revenue from the insurers. So whatever policy that we distribute on the platform, we take a cut from the insurer, which is the insurance commission, distribution commission. So the take rate or the commission rate, it's on average around 30 to 40% on the China side, and in Hong Kong is a bit higher, and Vietnam as well. So blended, call it, 30% take rate, and then the revenue is mostly just commission revenue from the insurers. And in terms of makeup of the revenue streams, from the direct to C and B2B to C and the 2A to C, it's roughly 20% direct to C. And then with the balance, 80% roughly equally split between the B2B to C and B2A to C. So a very much a diversified revenue streams from the three channels that we have. So this slide, yeah.
Got it. Got it. That's helpful. And on the B2B side, is that like a negotiated process, or how do you determine those commission rates?
Right. So commission rate is always going to be determined by the insurance provider. So with the insurance companies, right? So on the product, but then when we split revenues with the partnerships, then I think it's a combination of the relative bargaining power. For some of the channels with large volumes, obviously they can ask for a higher split. For some of the smaller channels, we can take a higher cut from them. But on average, we pay away roughly around 80% of the commissions to the partnerships, right? Because we are a platform provider to them. For the B2A to C is roughly around the same, 80 to 85% pay away to the agents.
Got it. That makes sense. And how can we kind of think about customer acquisition? I mean, it seems like on the D2C side, you mentioned any agent can kind of join the platform there. Is customer acquisition pretty low in that sense, or how can we kind of think about that?
So direct to consumer, what we do is we create a lot of content on social media channels, educational content. Sometimes it's more like a lifestyle kind of scenario. We create a short video with your parent, unfortunately, catching an illness or getting into an accident. We use these stories to bring out the insurance concept to the customers, and we publish this content on multiple channels, like I mentioned, Red Note, which is the Instagram of China. I also mentioned WeChat, which is the WhatsApp, and live streaming sessions. We also provide live streaming content to the market. So all these are lead generation channels that we do on the D2C side.
Understood. That's helpful. We have a question here, a couple questions here. One is on your financial performance. I think you're profitable on a full year basis. I think it was back in 2023. Positive EPS there. And can you discuss your recent financial performance as far as when you expect to be fully profitable? I guess just profitability outlook in general.
So I think right now, to be frank, our profitability level is not that high. But we have been profitable for the past few years, actually, although the absolute quantum is not that big. So what we're trying to do is we're still investing a lot in the technology of the business. You can see on our P&L, the R&D expense is still quite material. What we're trying to do is that right now, I think, of course, we are very focused on profitability, and we are profitable, on a quarterly basis. Sometimes we run into loss-making quarters, but I think we want to maintain that investment into our business. And we do believe that over time, in the next 2 3 years, when we increase our scale of the business, the operating leverage is going to show, and then profitability is going to be a result of that. So I think we likely be targeting the 10% net margin mark over the next 3 years. And on a quarter-to-quarter basis, we can be profitable anytime actually, if we wanted to just spend less on the investment on the AI side. Yeah. So I just got a question from the audience as well. I'm just gonna read out live here, which is exactly what you just asked, the path to profitability and how that aligns with the current market cap. So obviously, I think the market cap is not too reflective of our fundamentals, albeit we have a low earnings base. But I think that from many metrics, I think it's still relatively undervalued. That obviously, from the company perspective, we like to think it's undervalued. Trading at 0.3 times book, and basically less than our cash value on the balance sheet. So I think I'd like to spend more time and obviously with this participation this time to reach out to the US market and investor base more directly. And hopefully that would address the market dislocation on the valuation. And then the other question I got from the audience is how long does it take to actually collect commission revenue after the policy is sold? So typically we get the revenue 1 month after. So there's a cooling off period when the insurance customer buys the policy. So when the cooling off period is over, then the insurer themselves can also recognize the revenue, then we can recognize our commission. So typically it's around 1 month after the policy is sold. So I just got these two questions on my side. Not sure if Brendan, you have any others that you want to raise to me.
Yeah, absolutely. A couple more questions here. Why don't we talk about sales by product? Maybe what product types sell the most on the platform. Maybe just talk about your growth outlook, looking at specific products.
Sure. So I think right now we on this page we can see the main product categories that we sell. So in the China market these days, I think that people are spending a lot of money in the long-term savings products. So what we'll be referring to here would be the participating whole life insurance or endowment products. Basically, it's a wealth accumulation product, and the reason for that is the declining interest rate environment in China. I'm not too sure whether the U.S. audience is aware, but Chinese 10-year bond yields is around 1.6% right now, which is much lower than the US. So what that means is that the low yield environment is creating a lot of reallocation of wealth from bank deposits or other products into insurance because they have the long-term yield potential. And that's also driving a lot of wealth outflow from China into obviously Hong Kong is the catchment for the country, and Hong Kong is benefiting from a lot of this outflow of wealth from China, from the mass affluent market to basically get better yield elsewhere. So, Hong Kong is the international market, is the international financial center for the world, one of three main markets, and Hong Kong is US dollar, free convertibility. So a lot of the money that is RMB coming from China is being converted into US dollars and to invest in, obviously, product that's provided by the Prudentials and the Manolites, the AIAs, where the investment it can be global equities, global fixed income. So I think that's the trend. And then in China, we also sell health products, and a lot of these are critical illness products that we partner and co-develop exclusively with our insurance partners. We also sell long-term medical insurance. So this will be your hospitalization benefits. We have been partnering with Ping An, which is the top insurance company in China, to launch a exclusive product on our platform. So health products and savings products are the main products that we distribute.
Great, that's very helpful. And one last question from me, just on maybe from the perspective of a U.S. based investor, are there any key regulatory hurdles with the company operating in China, or any notable differences with the Chinese insurance market that a U.S. based investor should be aware of?
I think in terms of regulatory perspective, China is actually in some way even stricter than the U.S. market. The regulator has been very much detail out all the relevant regulations surrounding online or digital insurance distribution. There's actually a document that lays out all the rules for people to operate in this space. So I think regulatory clarity is there in China, and that's such a good thing. And it's only been the last 2 years where all these regulations have been kind of like done and dusted. So We have been in the transitioning mode in the likes of 2022, 2023, but I think for the last year and 2 year window, everyone has settled and all the relevant regulations have come out. I don't think there's any more surprises down the road. I think what the Chinese companies have been hurt in the U.S. market is a lot of the regulatory and clarity or lack thereof of regulatory clarity over the last few years, which has resulted in dislocations and investor losses. But I think that for our insurtech space in China, I don't expect any surprises down the road anymore.
Great, great. Well, Ron, we'll conclude there. We really appreciate the overview. A really interesting story, especially from the valuation perspective. Thank you, everybody, for joining us.
Thank you, Brandon, and thanks for having me. I hope everyone have a good day.
Likewise. Thanks, everybody. Take care.
Bye.